Good afternoon, trend traders. This is Dennis Wilborn. Welcome to the re-recording of the Making Money Trading Stocks and ETFs for Friday. And this is for the very first Friday in January 2018. I want to welcome everybody. I also want to apologize for the technical glitch that happened during the initial first recording due to Spectrum, our cable provider over here. They're growing their network. However, they are taking down streets inadvertently without any notification. So I want to remind everybody that all the materials we present are for training purposes only. Traders should always pay per trade any new method prior to the risk of their own personal capital. Past results are not indicative of future results. It's a little bit about it. Me, remember that active trend trading, we, put into place a motto when we first got started. We want to clarify, simplify, so that everybody can multiply their accounts. I take that very seriously. I remember when I was first starting to learn how to trade the market. I was working full time. I was a lieutenant commander in the Navy when we first moved to Hawaii back in early 1990s, like 1990, 1991 time frame. And I remember how hard it was trying to learn and work and trade. And so what I try to do is I try to focus on our system so that it does allow the people who are still working for a living to be able to trade it, be involved in the market without taking too much time in learning how to do it. Ran into this quote by Danzinger. Some of you may be familiar with Dan. He goes, "Your job as a trader is to wait for the best opportunities." Oh, I want to emphasize the words here. Wait. Money is made in stalking. That's not the bad kind of stalking. Sitting and not being active and forcing a new trade each day or each week. At active trend trading, we have 4 rules that get us into a trade, 6 rules that get us out. It's very simple. Our challenge is not to react or act prior to one of those 10 rules activating. So if we don't have an active buy signal, don't buy. If we don't have an active sell signal, don't sell. And so the objective of this webinar, How to Make Money Trading Stock webinar, is to, 1, timely and actionable intel review at the end of every week. This is the sister program to the webinar we do on Monday called After Market Monday. So if you can tune into each one of them, we highlight, the stocks are looking good for the following week. Occasionally we will have what we call a bonus trade, where for all active trend traders, both the premium members and the non-premium members, we provide that trade. We want to provide somewhere between 10 and 12 trades per year, or approximately 1 per month, so that everybody benefits from being an active trend trader. We then also provide stocks and ETF review of what we focus on. Remember, if you're a trader, and you learn how to trade the active trend trading way, that you have been given the keys, now learn how to open the door. As a reminder, we have a couple of new active trend trading team members who will be working with me going into 2018. One is Michelle. She is going to be the member service manager. She's a wonderful businesswoman, and she really likes to help folks out, with their process and all that kind of stuff of getting signed up and the admin stuff. And then Brandon, our youngest son, he's going to be working on website marketing and research. And that little booger right there is my grandson, David. They were out riding horses, and so they're in the process of moving. So, okay, let's take a look at what's going on in the markets. So first, as you see, here's how we finished last year. The first snapshot of today, which was about 9 o'clock this morning in Pacific time, showed us up about 0.2%. We actually only opened 2 positions. One, and they were the foundational positions in the strategy 3. And so we see the Dow, the S&P, the Nasdaq, the Nasdaq Composite, all just continued on, and even the Russell to a lesser extent continued on their winning ways that they finished up with in 2017. 2017 was a very strong year, especially for Nasdaq Composite, Nasdaq and Comp, and the Dow Jones. Spiders, nuts, S&P, a little bit less productive, and the Russell lagged everything. So stand by. When the Russell kicks in eventually, when it tends to catch up in a tear and just in a rush. So we'll be watching for that for the popper setups. I want to highlight, and first I want to go back and look at the charts themselves. Okay. SPX. Okay. As I highlighted during the live session that we had gone into, and hopefully, there we go. What we had highlighted during the live session is the S&P had been on this nice little uptrend, as you can see here and even here. So we can actually draw in a couple of uptrends here that we want to be monitoring. One is you've got this longer term ones you could draw through here, here, and continuing on up. So you can start at this low here, draw it through there, through those lows there, and just extend that to the right, and let's see where it goes. Well, bam, it goes. Actually, it didn't come across to this side. But as you can see, it crosses through that. And then I would adjust that down, if you will, just a little bit. Let's just activate that. Let's adjust it down to the bottom of those trends there. And so that's one trend. And then we had back in August of last year, we had a tick up where we accelerated up to the upside, and now we've had another acceleration to the upside here on the daily chart, as you can see, from basically from here up to here. And each one of these, basically, when it goes to a steeper incline, and the opposite is also correct in a downturn, it means you're getting acceleration. The velocity of the trend is increasing, and sure enough, we're getting a velocity increase back in August, and then again here on, this is November timeframe, mid-section of November, accelerated, and at some point at each one of those, it just you can see here, it just continued to push the price action on the S&P further and further away from the mean. Well, what does that mean? Well, that means that eventually, at some point, this is going to want to revert back to the mean. And however, what we've been getting over the recent past, going on recent past, actually for months and even years, is we've been getting these little shallow declines down to a moving average and then a rebound. So until the market stops doing that, we have to kind of trade it that way. So that's what's going on with the S&P. Nasdaq, something similar. Again, nice move up. I might get rid of everything here. And then we can redraw at a later time. Let's just clean that up. We've got this nice little move up here. Look at these pullbacks. Pullback, 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 surge. So where's it pulling back to? Or it'll pull back into a level of support, which you can see that's identified here. Pull back into a level of support, which is over here. So if we, take this as a move up, where are we expected to pull back to right now? Well, somewhere around the 65.25 level, but it may have some additional upside to it before it does there. One of the things that, as I'm watching this push higher, there's another level here we want to be taking a look at. This would be considered a breakout. Right there, approximately. So, as I said, this 65.17, 65.20 level, that could be a pullback into that and a bounce up higher than that. One of the things that It's not alarming, but just keep in mind we are getting some negative divergence on the TSI, and the momentum also looks like it's peaking. We can actually just draw a couple of lines. One, you could just draw a straight line across here, and if that is violated to the downside, that will probably mean that the Nasdaq is going to go into a not a big sell-off, but at least a pullback down into a range where it may be viable. Right now, we're extended. We want to trade the pullbacks, and we're not getting a pullback yet. Let's stand by. We will. Russell, a little bit different story on the Russell. The Russell has actually closed up very nicely today as it pushed higher after a bounce off the 8-day, the 20-day on Tuesday of this week to start the year. So it still hasn't busted out of this resistance all that well yet. But if we take a look at this and we do bust out of that, let's say we bust out of that next week, what might be in store? Let's take a look over here at TNA real quick to give you a potential. If TNA breaks out of the $74 level, where is it likely to go? Well, the way you measure that is we just come down here, go to this low here, measure up to the 74 level, take it, activate it, move it up to the potential breakout level, move it up to the potential breakout level, and hopefully it will stick. It did that time. Move that down a little bit. Where's it likely to go? Well, there's your upside target. Will it go there all in one day? No, it'll take a few days to get there, but that's the kind of pattern that it is shaping up to be. So we just want to keep our eye on it. Again, it is moving up at a lesser velocity than the other two indexes. So that's what we've got. But TNA looks kind of interesting. TQQ looks interesting. And, of course, UPRO looks interesting also. Let's move. So real briefly about seasonality. We are not in, okay, we were over here, now we're over here. What does the Nasdaq tend to do? Nasdaq can shoot up, 2%, 3% the first part of the year. It's already done that, and then kind of move sideways from there. So it tends to be a little bit choppy during the first part of the year. The reason we want to be aware of the seasonality, not so much as to it's going to emulate this exactly, but we want to take a look at where do the sustained moves up tend to launch from. And for the Nasdaq, it tends to be, midsection of February to the midsection of March, and then it goes into a nice little run up. Sometimes there'll be a sell-off pullback in the, I would say, the June, July, August time frame, and then again a takeoff in the September, October time frame. And so what we found last year is while the chart of the Nasdaq did not look exactly like this, it did in fact honor where it would have its historical or its seasonal lows or seasonal buy points, and that's what we want to be aware of. So that's where we are. Russell, similar type situation. There's where we were. Here's what Russell tends to do at the beginning of the year, and when I call it a tendency, okay, this is a 20-year gathering information that ended at the end of 2016. I'm going to go out this week and search in Google and find additional seasonality charts to see if this is how big of a difference this was made from 2016 to 20 years there, going back to what would that be, 1996, to see if it has any, and I'll bet you it doesn't have a lot of difference in the two. 2017, here's where the active trend trading system wound up. Very pleased with that. Again, as most of you know, premium members know, we have laid into place now some really good attention and focus to strategy 1, strategy 2, and strategy 3 for setting up our campaign for 2018. And we're patiently, there's that patient and wait word again, patiently going about building our portfolio up and getting our foundation positions in place for strategy 3, and doing some fun things in strategy 2 and strategy 1. So the active trend trading system is about following the 5 pillars of active trend trading. We basically, we have identified what we're going to trade. We have identified 7 top-notch ETFs, typically the leveraged version of the indexes, a couple of commodities, a couple of industry groups, and then top-notch or top-quality IBD growth stocks. And we follow our rules so that we know when to enter, when to exit, what strategy we're going to use, and then what we can expect from that strategy. In other words, the money manager, the trade management aspect of it. So looking forward to the next week. I will continue to establish my strategy, 3 positions. We got started. We've done basically. Then I'll get started also on my strategy 1 and 2. We have 2/3 of our strategy 3 foundation positions built. We have our Tesla position, our Spider position. NVDA we don't have yet because the implied volatility on NVDA took off at the beginning of the year, and so I'm not willing to pay up to $6 or $7 more to get into the at the money NVDA position. But we will monitor that. If it takes a week or a couple of weeks or even 3 weeks to get into the NVDA or a Netflix position, that's okay. Our floating stocks, our core stocks remain the same: Netflix, NVDA, Tesla, YY, Nugget. We're looking at gold has just gone back into an uptrend. And so that may give us some interesting opportunities. I'll take a look at that here shortly. Then finally, waiting for the setup with the Nexus trade for strategy 2. I'll talk about that here shortly. And one of the things I need to make sure that I have up is, there we go. And let's see, no catfish specials this week. We have instituted the new composite watch list. We basically I go through every week and I capture every stock that is on all 13 IBD watch list, and then I do some sorting of that and some analysis of that and put out a composite list that typically has about 100 watch stocks on it. It's different than the IBD 50, and what it is basically what stocks. And it answers the question, what stocks are appearing on more than one of the premier IBD lists, and are any of them in a potential action point to buy? Or any one of the alerts, we're welcoming new members of that. Then strategy 2, we have been refining and have refined this now to we're looking for, on average, to do income about $500 to $1,000 per week. Now, some of you may be going, well, you didn't do a trade this week in the first part of January, and that's okay. I also explain to people that I don't typically trade a lot during the first week, sometimes even 2 weeks of the year, simply because I'm letting the market settle out. Will we get to where we're achieving this on a weekly basis? Yeah, as the market settles out, I believe we will. Bonus trades, I want to highlight those. If you have not signed up at this website to at least become a free newsletter active trend trader, you won't get notified about these trades. This was our fourth quarter 2017. We generated an income or generated in profits $2,700. So everybody who traded along with us with this particular trade, put a little bit of extra jingle in their pocket for Santa, for Christmas holiday. Our go no go table for our premium members. It highlights, and this comes out once a week on the weekend. It highlights any entity of the 7 ETFs we follow, the 3 core stocks, and some of the floaters we're following. Any of them they show us. We'll set up the previous week in either a daily or a weekly chart, and then the explanation of what we're looking for as far as movement within the entity itself before it becomes interesting to trade. What does this do for us? And I'll just highlight it really quickly. A lot of time is wasted, and I'll just say that real bluntly, is wasted by people who want to be good traders doing going to the mat, searching for a potential thing so they can go through the excitement of trading every week. I find, and again, this is me personally, because, I'm at a point in life where, I still like excitement in life, but I don't want to necessarily have it in what I'm trading. I find it's better to wait until one of these provides us a setup, and then don't miss the trade. Don't miss the trade. And that's what we're working on. So all the premium members, this is the list we work off of on a weekly basis. And it makes it so much simpler because you're not there chasing, saying, okay, let me go trade Bitcoin. Let me go trade this. Let me go trade that. There we go. Now, the Tesla trade, okay? And I have put together just go to my YouTube channel. I put together really, kind of a humorous video together there about, the tech tip, trading Tesla for a Lexus, with the concept of how to buy a Lexus, brand new Lexus, for $5,000. And what I'll be doing is I'll be sharing these trades with the premium members. I did a little bit of testing on it this week, and so these trades for Tesla will start coming out on a weekly basis. They will be strategy 2 and or option trades. One of the let me go over to, there we go. Here's my Tesla Nexus trade that I pulled this off of. What I found was basically, because of the power of compounding, if I just took the value of this Tesla at 38,500 and divided by 7, I would need $740 per week. Well, that's a tough nut to crack on a consistent basis for 52 weeks. However, if I take, and it does not take into consideration compounding. Whereas, look at this compounding table. If I start generating $217 a week, 4.35% on whatever I'm holding, in this case, $5,000. That's all I'm holding. $5,000 I've set aside in my real money to trade this trade. And so that's what you're going to see. I think it's going to be a tremendous lesson in compounding. But as you see, by the time you hit 52 weeks down here, I will have generated enough to pay for that $38,500 NX300H. And it may be a really good lesson on what we need to think of from a strategic campaign standpoint, and focusing a lot on, okay, the compounding of taking my earnings from last week or last month, adding to what I have, and be conscious about what I'm reinvesting. That's the way compounding works. And then up here, I'll track, what I actually did for the week. And so if, because that may be better. And like this week, I said I floated out a couple of test trades that I did not provide anybody, but these test trades worked out well for a couple of directional puts. And so for the week, I was up $560. So right now I'm ahead of the curve. But let's have some fun with this. And if you want, you need to be a premium member to be able to get the alerts on this particular one for strategy 2. So I want to remind everybody that this is the last weekend to become an active trend trader, a premium active trend trader at this discount. Save 40% and or the early warning alerts. Again, save 50% on that. As of Sunday, okay, at the end, at the close of the day on Sunday, this offer goes away. The end of the year special will have ended. So as I always say, I anticipate 2018 to be a year of breakthrough for many of our traders and restoration. So keep growing the egg, trade wisely and profitably. You can find us at that place on Facebook, that place on Twitter. And if you do follow us on either of those and or our YouTube channel, please give us a thumbs up if you appreciate what's going there. And some of you have been doing that. I really appreciate it. It really makes me and Michelle feel awesome. So as usual, we followed today's session up with the premium members for the next with the final hour, and we talked a lot about getting our strategy 3 position, how to do it, how to launch it, and it was a very good session. The video of all these will be up shortly, so I'll bid you adieu. What was I going to take a look at? Oh, I want to throw out one thing to take a look at. This may be our first grub. Grub may be our first bonus trade of the year. I'm really liking Grub. As you see here, we have a TSI tick up and crossover off the 0 line. Isn't that interesting? Again, that 0 line works as a great support area. We have bounced above the 8-day moving average, broken out of this level here. So if I get a little bit of a pullback back into the 72.65 level, or if I break out there, that would be an excellent trade. The low of today would be, or below this, the 20-day moving average. A close below that would be my exit sign. And I'll show you one last thing on this is it has broken this little flag line with a little bit of increasing volume. So that's looking pretty positive and we may get, oftentimes on these, they'll break out, they'll come back and they'll flirt with the break and with the trend line. And that's what we call kissing the trend line goodbye. On an intraday chart, I would probably wait to buy until what? Until I get one of these, or I get a bounce back off of the 8-day moving average, the 50 period moving average, which is here, which equates to the 8-day moving average, which is there. Interesting. I keep reminding folks this 50 period on a 1-hour chart equates approximately to the 8. Well, the 50 is at 71.85. The 8-day is at 71.99. So there's a 14-cent difference, 14-cent difference there. So it's close. So that's what I want to highlight and give you my gift for the first week in 2018. This is looking very good. Again, I may put this out as the first bonus trade for all members. So with that, I bid you adieu. God bless everybody. Have a great, wonderful weekend. And if you're a BAM member, we'll see you on the BAM meeting tomorrow at 9 o'clock Pacific.
Hi traders, this is Dennis. Just a reminder, the end of year special ends on January 7th. Don't miss this wonderful opportunity, 40% off the regular premium membership. Act now. Aloha. God bless.